Hello, everybody. Welcome to the live stream Wednesday night. It looks like there's a little bit of a relief rally. And I have to tell you, I think there's going to be a little bit of bumpiness and a little volatility coming through, but don't let it distract you from the gains that are potentially out there. So let's just jump into it. We have a lot of things to go over. So first thing, we take a look here at the markets themselves. I'm pretty sure you've already seen this, but we have a nice little pump of a day. Bitcoin up 2.5%, 104,000. Ethereum, we all know this stuff. Everything's looking very swimmingly nice. But as a reminder, we did lose $500 billion. The market cap is 3.5 trillion. We were over 4.2 at one point at a very nice time. So I know we say, oh, it's a green day, but don't let them forget. Don't let you forget what has been lost. And it's quite a bit. Now, of course, we can take a look and say, well, we're up over a year, we're up over 2 years or 5 years or 10 years. But the reality of the situation is as such that we have to take a look at what's going on the here and now. And I have to tell you, I thought yesterday would be a little bit worse. I thought we'd probably go into like the 95s, 93s for Bitcoin, but it didn't. And it bounced back. So there's a little bit of strength, a little bit of a resistance level, which would be 100K. And actually, I thought that we'd have more of a sell-off in the ETFs, and we can see that actually did not happen. As far as for yesterday, we had across the board, I find this quite interesting, actually. Fidelity, Bitwise, ARK, Franklin Templeton, everybody sold off. Everybody, except for BlackRock. And of course, a little bit of smaller players like Invesco and Valkyrie and Wisdom Tree. But it is amazing because the last 4 days, unless this is inaccurate, let me refresh this. Maybe this isn't up to date. No, look at that. BlackRock did not sell yesterday, which would be a fine time. However, before that, there was quite a bit of a sell-off. So, of course, we talked about the difference between the 2021 reduction of the bull market and then what's happening right now. And you can go back and watch that video. But today I want to talk about Repo. This is from Quinton over on X, and he says, breaking the repo market just broke. The Fed just injected $29.4 billion in the banking system. The overnight repo, the biggest since 2020. Remember that time, but it was quite a good time for quantitative easing. And actually, during this time, when the repo came in, we also saw the end of quantitative tightening, and there was about an 8-month gap before we did quantitative easing, which we covered yesterday and a couple of days before that. So the macro was still pretty important, and we can see just what's happening right here. But you have to ask yourself, obviously, what is the repo market? Because it's not like something that most people talk about unless they're in, really deep into different things, or maybe just superficially, depending on what you do. But I always think of the repo market as like a short-term loan market for banks. So banks lend each other money overnight, and they use U.S. Treasury bonds as collateral. This keeps the financial system kind of runs smooth the day to day. But if the repo market stops working, it means banks, they just at some point don't trust each other, or in this situation, they just don't have enough cashola on hand. That's what's happening. So what does it mean here that the Fed injected $29.4 billion, as opposed to in 2020 when it was 55 something like that billion? And this means that the banks didn't have enough cash to lend to each other, which is kind of odd, don't you think? That one bank doesn't have enough to lend to another bank and the repo rates. But no, they just don't, and liquidity is driving up. Why is it drying up? Well, we've got certain issues with the government, and we'll talk about that, why it's so important, and why I don't think they're going to open up anytime soon. And that's going to lead to a little bit more volatility. So if the banks don't have the money, what do they got to do? They got to go pop a Federal Reserve and say, hey, guys, we don't have enough money. So the Federal Reserve has to step in, they have to loan the money directly. The Fed does this like a fire truck. If a fire truck showed up, it's an emergency. And something is on fire. I'm not for sure if it's the economy or not, but it's not looking too good. So is 29 billion a big number? Yes, it's as opposed to what we saw with the 55 billion. And that is actually where we're at right now. So that is essentially the repo markets in a nutshell per se. And you can just see it right here. I mean, take out the Federal Reserve and put a bank. That's usually how it goes, and the Federal Reserve has to actually step in. So what does this mean for digital assets? Why are we talking about repo? Who cares, right? Well, this piece here, to take a look at why that's important, a repo market issuance can be an early signal of rate cuts. Of course, we know that that's happened already. We're going to probably see that in December, depending on how much. We don't know. Also, interesting enough is that the Fed's not going to have data because the federal government is closed. So I don't know how they're going to actually pull that magic off. And if they don't raise rates because they have no data, where do we end there? This is not looking too good initially. So repo market, that could mean also quantitative easing is returning, liquidity rising, crypto rising, be great, right? So should you panic? No, it's a signal, not an event. What it suggests is that we're close to a shift in Fed policy and markets could be near the liquidity bottom. This is often closer to the beginning of an upward cycle. So I asked the question, well, does the government shutdown affect liquidity? And yes, the reason is because Treasury can't issue new debt. Federal agencies stop or they slow payments. I think we're seeing that right now on SNAP, or as I used to call it, food stamps when I was a kid and we actually had to use that. And then money stops flowing in parts of the economy. Banks and financial institutions get less cash than usual, and it's a big, huge problem. So a spike is a yellow alert, not a red alert. It means liquidity is tight, money is getting scarce, banks are being cautious. And of course, this is somewhat due to the government shutting down. If it continues, you're going to see lower rates sooner. That's good. We're going to restart quantitative easing. That's also good for us. And we're going to loosen financial conditions. That's also good. So I know right now we take a look at that like, oh, this is awful. The Fed's coming in and doing all these things. But it's actually good for us short term. It's bad for everything long term. And I think we're going to have to pay the piper at some point. So what does this all come down to? There's 3 metrics you should check. As opposed to, is this like a yellow alert, or is this code red, nuclear attack is happening? So there's 3 things to look at: the overnight repo rate versus the Fed funds, the reverse repo facility, and the Treasury general account. Basically, it comes like this. You just take a look at this, this, and this. And what this is here, the secured overnight financing rate. If the rate here is higher than the rate that the Fed is giving out, which right now the current Fed funds rate is 375 to 400. If it's around there, it's good. But if the banks are paying like 5% overnight rates, that's bad. That means they are so stressed for cash, they'll pay for anything. But right now, as of Tuesday, it's 4. That's right along lines with the Fed funds rate. So that's good. That means that it's not out of control yet. This is also fantastic. Also, the overnight reverse repurchasing agreements. And this is all the liquidity that essentially the Fed has. And you can see that in 2022, 2023, whoa, there's a lot of liquidity there. But as time has gone on, they've dumped it into the system. And right now they don't have as much liquidity, especially with the government shutdown. So what does that mean? That means, hey, we got to start printing money because we don't have any. And I gotta tell you, it must be great to be the government. I wish I could do that with my credit card payments. But I can't. I can't just print money out of thin air. But the government can. And then lastly, liabilities and capital. And when the liability starts to go up, that's also a bad sign because that means that they are putting things in the balance sheets. And this is called the WTTGAL. And we see that back in 2020, look what happened. They had to put a lot of that onto the balance sheet. And of course, they paid the piper later as we got into 2022, and we had a nice little drawdown, especially for stocks. And right now, what does it mean? It's going up again. And actually, it's second only to the pandemic era. So it's not out of control yet, but that's where we're at. And if the Fed doesn't cut rates, and if they also don't start quantitative easing, I think we're going to have problems. And that's where we're at right now. So again, all 3 of these metrics aren't flashing. The rates are within reason. You do have a loss of liquidity, which means they're going to have to start printing at some point. And the liabilities aren't out of control. But when all these 3 flash at once, they have to lower rates, restart quantitative easing, and reflow the system with liquidity in some way, shape, or form. So that is what is happening. And I don't say it happening for a little bit because of a little problem, like we've been talking about, is the government shutdown. The U.S. government is shut down, and Polymarket is crushing it in the predictive market space. They just pretty much called the New York mayor race roughly 30 minutes to an hour before any of the large publications did, and they had called it correctly all the way up to them calling it for, what's that guy's name? Mjambi? I always forget his name. Mamandi? Anyhow, New York's got a new mayor, and Polymarket caught it. And now they're saying, when will the government shutdown end? Well, there's a 2% chance it's going to happen between November 4th to 7th, 18%, 8th to 11, 34%, 12 to 15, and 43%. And actually, a lot of the markets that I've seen, they're talking about December 1st to December 15th opening up the government, which means we can get the ETFs approved, which means we can get bills passed, clarity and stuff like that, which means we can actually move forward and people can start getting paid. And again, what is the market not like? Ambiguity. And this is very troubling times. So this is what Polymarket is saying. And I got to tell you, this is not good. However, it looks like Chuck Schumer, who's the Democratic Party lead, and Jeffries looks like they are seeking a meeting to end the government shutdown. This just came out at 7 o'clock in the morning today. So maybe Trump will take that meeting. I don't see them compromising and opening up the government just because these two guys want to start it off. But hey, we'll see. It looks like nobody has voted to open it up again. So we're going to have some problems. So on that part is part of the macro. Another part of the macro also, tariffs. I find this very interesting as well. Tariffs has been the bane of our existence in the crypto market because it seems like Trump always likes to post stuff, which kind of dumps the market. Hey, I don't make the rules. It's just what happens. And apparently it's going through the Supreme Court to see if this is constitutional for the executive branch and the President of the United States to have full autonomous control to apply these tariffs to these other countries like China and India and Russia and things like that, countries like that. So this went all the way to the Supreme Court. And if they strike it down, that means that all these tariffs that have been put in place, this is going to sound crazy, they're going to have to reverse them. And the funds that were collected, now they become up in the air. What happens to the $200 billion that has been collected by the current presidential administration, as they have collected quite a bit from American companies? Does that mean that it goes back to these American companies? Because if that does go back to the American companies, that will ignite a pretty good run. But what does this mean for negotiations for, say, China and the rest of the countries? I'm not a geopolitical expert. I have no idea. But I'm just telling you that it looks like right now, as of today, there's a 25% chance that the Supreme Court will rule in favor of Trump's tariffs. And if they don't, that means the tariffs, not that they go away, it just means that Trump and the current administration are going to have to go through Congress to get the tariffs to go into effect. And the way that these guys are at each other's throats, I don't see that happening. So that was a lot of macro, and I apologize. I don't do that much, but that's what it is. Let's get into crypto and then get into Q&A. Here's some good news. Hats off to MetaPlanet. They just borrowed $100 million, please, that's amazing, $100 million loan by using its Bitcoin as collateral to buy more Bitcoin. I have to tell you, I thought all of these companies would fold except for MicroStrategy. And MetaPlanet has proven me wrong, and I'm glad to say I was wrong. Fantastic, MetaPlanet, you keep doing the things you're doing because this props the market, and this is the things that Bitcoin investors want to see. Digital asset treasuries getting behind their preferred digital asset, in this case Bitcoin, and doubling down. So great job, MetaPlanet. Unfortunately, I wasn't 100% wrong. This is from Coin Bureau, Sequans Communications. I have no idea what that is. They offloaded 970 Bitcoin. Do the math in the comments section, how much that is. Cutting its debt to 94.5 million. They are the first Bitcoin treasury firm to sell its holdings. I told you that would happen. So I am pleasantly surprised, though, that there's going to be, and this is where I messed up, there are going to be these digital asset treasuries are going to hold on, double down, triple down, quadruple down, and they're going to make it. And there's other companies that are fair-weathered friends, like, you know what, maybe this isn't for us, and they're going to sell. I didn't think that we'd have this kind of dichotomy, but here we are. So let's see which ones went out. Congratulations to the winners. And then lastly, to leave on a kind of a sour note, I suppose, we briefly touched on this yesterday because Wes from Smart Money Crypto had sent me a text, and I was just reading it during the live stream, and he said, hey, mate, I can't do a British accent, but he says, hey, mate, Smart Money's selling. You should check that out. I was like, oh, really? And we always talk about the Smart Money Stablecoin Indicator. This is when the institutions and the hedge funds, once they know which wallets they are, and they don't know all of them, but once they know, they track it. And once these people sell their crypto, they don't put it into cash, they put it into stables because they're going to get back in. That's the whole point. So when you have a high amount of stables, it means that they sold a bunch into USDC or Tether. And you can see here in 2022 in June, they didn't hit the greatest time, but pretty good. And then we talked about it. But what's concerning is this little pitch right here. They had been accumulating right here and doing little sells here. And then I found it very interesting that on October 6th, and you know the relevance for that, they started to sell a little bit more and a little bit more. It took a little bit of a break, but then the trend was to sell. And then as of yesterday, they put a bunch of sells, November 3rd, 4th, and then today, whatever that is. A little bit of an uptick. So we'll see if that continues. That doesn't tell the whole story. What I try to do is tell the whole story right now, but that's it for today. So look, if you like today's video, give it a thumbs up, consider subscribing. We talk about is time sensitive. That's it for this piece. Now, let's do a little Q&A. I'll ask you guys some questions, you answer me, and we'll get out of here. Let's get into it. This is important. Well, Cat2 is important too, but 97420 Empire says, my grandma used Pond's cold cream every night to clean her skin. Now that is the kind of hard-hitting journalism that we need here on this channel. And, you know, Pond's cold cream soft face, this is important. This is very important. So everybody, this is the new game. It's not meme coins. It's not DeFi farming. It's Pond's cold cream soft face. These are the people who watch me. Memes here. But is Sequence really a digital asset treasury? From what guy from Coin Bureau says, it looks like they are, if they're not full-fledged, well, none of these are just straight-up digital asset treasuries. Well, that's not true. MicroStrategy is, I mean, it's a data analytics firm, but no one's buying their stock for their great data analytics. Let's be honest. They're really getting into it because of they bought a bunch of Bitcoin. And there's a lot of different things they're doing, yield and such like that. But Sequence, in some way, shape, or form, they are. And in that situation, if they sold that much, well, it's just one more. Again, we'll see how many actually sell, how many stick around. Waffles says, tariffs go away, stock markets goes up. That is true. And I get some conflicting reports. The session for the Supreme Court just started on October 6th or 5th, click in the comment section. And because of that, they start to hear cases throughout their term. Well, they're appointed for life, obviously. But this is the United States Supreme Court. However, when their session ends, and it looked like it was going to end in 2026 for each of these sessions, I was under the assumption that they would rule towards the end of the session. But it looks like they're fast tracking or something with the tariff discussion. And it looks like they could be giving a ruling relatively quickly. So it looks like they're not buying the argument that is put out by the Trump administration that they have autonomous control and executive branch can't do everything. We need the other two. So we'll see. It looks like we might get a ruling within the next week to 2 weeks, which would be a pretty big bargaining chip. I got to tell you, taken away. So we'll see how that works out with China and the rest of them. All right. Good news for me. Let me come back to haunt them. Mullet is here, probably selling his billions of dollars of crypto layer ones. Graces us with his presence. That's good. Swiper is an LMAO. My grandma kept her cold cream in the fridge. See, this is the type of stuff that we really should be talking about. Getting older. There's only so much of this light that can help me look, decent. I think Bob's X, post a few hours ago, spot on, could be 180 or 60 in 3 months. Yeah, exactly. Nobody knows. We're all guessing here. Katu says, Coach, just give us what you really think. Is there going to be an alt season in your opinion? Alts will run. They will run. They have to run at some point. I just don't think, and I've said this numerous times, I don't think all the altcoins will run. And it's because VCs and greed and people who came in to gamble, they either won big, the 1 to 2%, or they lost massively, the 98 to 99%. I think most of those tokens are just dead and going away. And they might be worth something, but then you have to ask yourself, well, how much liquidity is there and how much can I take out? And I don't think they're going to run up too much. I am still standing by my thesis, which is that payments are the killer app for crypto and digital assets, and that Wall Street will build on these types of rails. And those are the best ones. And the best are BEST, Binance, Ethereum, Solana, and Tron. Why did I say that? If you've been here for a while, this is pretty annoying to you. I'm sorry. But if you just take a look, either DeFi Llama and Visa on-chain analytics, it'll show you the top chains for the top stablecoins, which is USDC and Tether. And those are Binance, Ethereum, Solana, and Tron. So those are the ones that are being used the most. Are they going to be the absolute winners? I'm not for sure. But in every industry, you have winners and you have massive losers. I think the same thing that happened in the .com era. You can only have so many pets.com and so many different Ask Jeeves browsers or search engines. If you know what Ask Jeeves is, you are old. But if you realize that, only a handful will win, it's the same thing that happened with the .com. It's the same thing that's going to happen with AI, and it's the same thing that's going to happen with digital assets and crypto. And that's where I have here. Fairfax says, no, sweet love. I mean, it could do some things. How much is it really getting in there? And as far as like adoption, how much is Sui being used? Besides Raoul Pal talking about it, I'm not for sure. It is a great chain. It's very fast. It stays up. I don't think there's been any downtime that I know of, and extremely quick. But it's like the VHS DVDs and Betamax. Betamax was a superior technology, and it still lost out. It just depends on who's going to adopt it or not. But what do I don't know. I prefer to Ask Jeeves. That's an old browser or old search engine. Winner takes most. Yeah. Gail, Ask Jeeves, yes. We're all old. Let's see. And let's see. Blu-ray. Yeah. Alt with utilities. Any light at the end of the tunnel for Theta? I mean, it was a great run. I don't know. I still have some. I would like it to do well so I can bequeath my bags to the next level of investor who comes along, so that I may gently put the bags down on the ocean floor and they may pick them up and gallivant away as they invest into the future. Some might call that dumping your bags. Whatever. I try to make it nice as possible. Let's see. Yeah. Hey, Rob, your dash assault made big moves the other day. It goes to show you, see, just like I'm talking about, like I have this thesis and, I sound reasonably intelligent. I still got some things wrong. I would always talk about a dash assault is, one of the big losers. And we take a look at dash, where it went. Let's just take a look at dash, which is not losing right now, as Meme has pointed out here. So, D-A-S-H, dash. Okay, it's down 15%. Okay, for the max, it's down a lot. So maybe I'm not too off. But we're going to cherry pick data. That's what we do here. So over a year, look at that. Look at that. Dash went from $23 to $65 to flat for 27, and then boom, $117. Why? No idea. Whoever held Dash for that long, congratulations. I don't know why you did that. But I would always talk about a Dash assault. Well, over a year it's down, but who cares about that? What about a month? Okay, that's not too good. How about we take a look at Max? Okay, now that one still holds true, dash of salt. There we are. And then, of course, the new darling from the old ones. What is that one called? Is Zcash. Look at this one. Let's not look at the max. Let's look at the year. Now we're talking. So it went from $38, $58 to $445. That's at a nice 10x. Yeah, roughly. So congratulations, Zcash holders. I don't know why you held that long. I don't know what makes it so great. I think there's a privacy component to it. That's fantastic. But a 10x because of privacy, I'm sure there's something behind that. I just don't know it. So great. That looks better. Zcash is backed by Grayscale. So are a lot of things. What does that make? Does that really make a difference? Is like when you hear about Grayscale and they're actually doing something with some project, you're like, ooh, I got to get into that. I think maybe like 3 or 4 years ago, kind of like Coinbase when they list something, you're like, ooh, it's on Coinbase. Now nobody cares. Let's see. Guy from Coinbase is bullish on SWI. Yeah, that's great. Well, let's see which it works out. I don't know. Let's see. Limit order buy only. Echo Lee. Are ETFs really going to do anything? Probably not. You know, it's a funny thing because like when Ethereum's ETF came out, it did nothing. I mean, there was really pretty much a big lag. But then we got a little momentum when Tom Lee came out and said, guess what? I'm going to be the CEO. I'm going to have this great company called BitMine, and we're going to be a treasury. We're going to buy it up, and things started to move. And then all of a sudden, we started to get these great news about Ethereum, and Wall Street was building on it. It was a nice narrative. And then, of course, Robinhood comes around and says, you know what? That layer 2 Arbitrum, we like that. We're going to tokenize everything on Arbitrum. And all of a sudden, the thing that moves the fastest in the universe, not the speed of sound or the speed of light, but the sentiment of the crypto market, turned around, and everybody now loves Ethereum, which is great. But it's good for me because I have bags of that. And we'll see. Is alt season canceled? I think it's delayed for sure. We need to have some things move. We need to reopen the government. We need to finalize what we're going to do with tariffs. We need to have more rate cuts. And if at all possible, this is just a request to Jerome Powell. I don't think he watches the show, but he might. If you could just start the money printer, that'd be fantastic. Anyhow, that's a great way to leave it. Everybody, thanks so much for stopping by tonight, hanging out with me for 28 minutes. I appreciate it. Like tonight's video, give it a thumbs up. Consider subscribing. Everything we talk about is time sensitive. But that's it for tonight. Tomorrow, we're supposed to do NFA Live. I'm not for sure if the guys are going to be with it. Guy from Coin Bureau and Ben from CRYPTOVERSE. But we'll see what happens tomorrow. That's it for tonight. Thanks so much, everybody. See you in the next one. Adios.